This is the weekly economic and market update for the week ending October 28th. And I look forward to the week of Halloween, October 31st. And kind of just to set the tone here a little bit, there's some questions that are starting to, maybe they're more narratives of things that are being talked about uh, online, in Twitter, social media, um, financial stations, those types of things. But the question is becoming, is this the end of the tech boom? Now, this is something that I have believed is going to happen just naturally. Tech has always been where the money went, and um, you know, there were a lot of things happening here over since the beginning of this year that would indicate that that may be so. And it wasn't just this week. We had Amazon that missed earnings and it dropped 20% plus at the time of their reporting. But if you look at all of these FAANG stocks, so that's an acronym, FAANG, starting with Facebook. Facebook was $380 at its height. Now it's $99. So it's almost 25, 75% less than it was at its peak. And then you look at Apple was at 183 at its peak, and now is at 155. So it's held on. It's still got a very large market cap. Look at Amazon, was at its height 189, and now it's 103. We look at Netflix, the end of the FANG, was $701 at its height, and now is $295. I mean, then look at Google. Now it's split, so these numbers may not be real familiar to you, but at its height was 151, now it's 96. So those of almost all of them, save Apple, it's still down, have gotten a pretty good haircut since they've reached their peak. And there's a lot of headwinds. Interest rates have a huge impact on the technology stocks, especially the growth, and they've continued to go up. Now, they've been kind of bucking the trend. At least Apple did today. Made a pretty big comeback. I think it was up maybe $11 or $12 at one point today. And some will hang on longer. Apple's kind of considered to be the king of the hill. So we'll see. I do believe there's a transition going on to other things, and there'll always be some other industry that rises up. I still think semiconductors will eventually recover just because they're used in almost everything, unless something new comes along, right? So that's kind of something that I'll be talking about on and off in these. Another thing that I'll be talking about is the transition. What are we going to as we move forward? And these don't become these being FANG or technology stocks, growth stocks being kind of the focus. Now, another thing I wanted to talk about was an interesting kind of Fed pause. We're starting to hear more narrative from the Fed and central banks, and a lot more pressure is being put on by Congress and other countries on the Fed to kind of pause things. So just looking at that, the Bank of Canada, which was supposed to raise their rates by 3/4 of a point this past week, only went up 0.5 point. Now, if the Fed does that next Tuesday, and we'll be getting into the schedule here ultimately, but if the Fed does that next Tuesday, you can almost plan on the stock market going nuts. So just kind of a heads up. If you hear a number of 0.5 as opposed to, I don't think it's going to be anything less than 0.5. Now, if it is, then, Katie bar the door, this thing could be going up extremely high. But even if it's a quarter of a point from three quarters of a point down a quarter point to half a point, that will trigger some things, I think, in the market. So you can almost be prepared for that. But regardless, my personal sentiment, which I don't put on here anymore, is that this thing is going to go up. Now, how far? I don't know. If you're, I did a episode on David Hunter, who's probably the most optimistic that this thing is going to go, to a Dow Jones of 45,000. It's going to go to NASDAQ to 20,000, S&P to 6,000. I mean, these are all numbers that he's throwing out. If it gets that high, great. I think we'll approach the new highs, and will it be just a bear market rally, or will it turn into something else? We'll find out, I guess. So it's just kind of to hedge your mind. This is extremely difficult market to invest in, and my main concern that I'll talk about, especially at my ending commentary, is going to be how are we preparing ourselves for something very different. The 60-40 blend of stocks and bonds is not going to work. I don't believe. I think we're going to have this big rise, what I call the pendulum. We're going to have this big rise, and then things are going to fall apart. And I've been saying this for several years, primarily based off of some of the data that I've looked at, and also some of the narrative that Peter Schiff has put out, and kind of follows my Austrian economic line. But that this thing is going to bottom out. Now, goes down 80%, like David Hunter says. I don't know. I could even see 90%, to be honest with you. When things start to fall apart, they fall apart pretty quickly. And so we'll have to see, what's happening. If things get too frothy, then I'll have to change my trading strategy. But I think everyone needs to understand a lot more about trading than the average person does today, because they outsource it to somebody. And I'm a strong believer that, yes, get financial help, but you need to be your own fiduciary. Nobody's going to look out. Brokers have 50, 100 people that they're dealing with on a daily basis. Think you're going to get a personal plan with that? Now, you got to look out for yourself, and you're going to have to change your mindset moving forward. Okay, so I don't want to make this too terribly long. We'll hit some of the highlights of things that happened this week. We looked at the PMI on Monday, and it dropped more than they expected, down to basically, well, you got services, manufacturing, and then a composite, which is a combination of both. But all of them were down. Services from 49.3 to 46.6. Manufacturing 52 to 49.9. Anything under in the purchasing in the PMI is it's starting to not only slow down, but it's in a position where it's going to be shrinking. So that's the notice of the PMI. I skip before I get into this anymore. Well, let's just go ahead and finish this. The housing price index year over year down 11.9%. Housing was very hot up there at 19.3, and this is going to be different for different sectors. Mortgage rates. Let's take a look at the mortgage rates. Are now well over 7% at 7.16%. These are all things that are going to slow housing down here in the future. Look at new home sales. And it's starting to make its way back down. We had a little jump up last month, but it's starting to lower. And again, as the interest rates go up, new home sales will start to go down. Also, we look at durable goods, and durable goods hanging in there, up at kind of stayed stable at 0.4%. And GDP growth rate 2.6%. Now remember, this has been running negative, and so we're barely positive for the year. I think this is going to be an anomaly. I think it'll go down when they report in the next next month. But we're in a recession. I'm sorry. What else do we have here? Pending home sales. Pending home. We're down. This one I kind of added in because core PCE was going to be one of the big measures for today, but I added this in just because it was down 10.2%. I mean, that's pending home sales down 10.2%. That was a pretty big number, and as you can see, previously it's down just 2%. We've been as low as 8.9, but a 10.2% drop was something to take note of. PCE. Now, this is the thing that kind of threw me. I mean, this is why you can never, just look at economic measures like these and then make assumptions about, what's happening. The PCE was the same. The core PCE, remember, minus food and energy, was 6.2% last month. There was no real consensus, but came at 6.2%. Okay, well, that's not an improvement, And then the market dropped initially, not much, but then it just went on a tear today, which is Friday, 28th, and it surprised me that it all of a sudden just ignored that and is starting to ignore the Fed. And so what do I believe? I believe that everyone's anticipating that the Fed will pivot, and I think regardless that the market's going up from here. That's an opinion. Okay, some things that I didn't cover I meant to. We're starting to see the sentiment change. We had reached a height of 60.9% a few weeks back, September 21st, and now we've dropped roughly 10 and a half points on the bearish side. The bullish side picked up four percentage points, and a lot more people neutral now. And so you're starting to see the dial of a contrarian trader. We like to see this thing down more, lower, but we're starting to see this run. And you're also starting to see it in this fear and greed index of, go to it real quick, and you can see that we're in the greed here, and we were just a month ago at 19 extreme fear, and this thing is already moved all the way into the greed category. I get a little more concerned when it's there. When it gets to extreme greed, I will probably be looking for exits for things to happen. But these are volatile markets, and they're difficult to invest in. That's why I want to advocate here for people at least understanding how to trade. And investing or trading are two different things. But before we do that, let's look at the calendar for next week. There's just a couple things in there that I want to make note of. It's going to be a employment week, and but the primary thing is going to be Tuesday. What is the Fed rate decision? Comes out at 2 o'clock on Tuesday, and expectation again is going to be 3/4 of a point. If it's something less than that, the market is just going to explode up, and we'll look at these non-farm payroll or the jobs report. The unemployment rate will be on Friday. So those are kind of the two big things that I'll be looking for, unless something really drastic happens in some of the other numbers for us to take note of. Okay, so this is kind of my final commentary, which I've been leading up to, which is that if what I believe is going to happen happens, which is that we're going to see some type of rise, maybe to all-time highs, maybe close to the all-time high in each of the markets, that I believe is going to happen, and so it is as such a. I think it's going to be very difficult for people to just expect it to fall apart right now, and because of that, there's going to be, if there's this rise, there's going to be a lot of euphoria. We'll see that fear and greed index. We'll see the extreme greed. I mean, like off the charts type of greed. And David Hunter's belief is that will happen, where it's going to be something. I quoted the numbers that he had, and then we're going to have this 80% drop. And Peter Schiff has been talking for a long time about that type of number, somewhere in the 80% range for the markets to fall. But his belief is more that it's going to happen now, and meaning we aren't going to get this either bear market rally or this melt up, as David Hunter gets to, in upcoming, where most people are still kind of, it's just swinging up and down, and there's really no direction at all other than down. And so that puts David Hunter as the true contrarian that's out there. And I have some belief in it still. I'm waiting to see if next week we get through some of the numbers in the S&P, which I follow very closely, to 390 or something like that on the S&P, because that seems to be where there's some resistance. But if this happens and we get this 80% drop after this rise, a lot of people are going to lose a lot of money, and that's why I want people to be aware that this could happen. It's a possibility, and as each day goes by, my personal belief is that possibility increases, that we'll get a run up, and that has a tendency to get the fear of missing out, or the FOMO kind of component of our psychology, and people want to get in when it's going up, just like in 1929, and then all of a sudden the rug is pulled out from underneath you and it goes down 80% fairly quickly. There's going to be a lot of people losing a lot of money, and so I just want to have people be ready for anything. Always have one foot on land if you're going to have one foot in the boat. And that's why I suggest people learn the tools that are available to you. And I think you can start. There's a guy named Chris. He's at ProjectFinance. I'll put a link to it. That'll go through kind of the fundamentals of option plays. Now, I'm not saying you have to do it, but you should. I'm not saying that you have to trade options at all. Maybe being in cash at some point is a good option for you, but I think everybody should know what a put is, what a call is, some of the fundamental tools associated with options, just to kind of know what's going on around you. I mean, just having a fundamental knowledge of the tools that are available to you. And so it's about, and I think it's an hour and a half or so, is this video that Chris put together. I don't believe he sells anything, which is one of the reasons I like him. He's not trying to pitch anything to you, as I am not. And so watching his videos will give you the fundamentals. Now, it won't give you the strategy, and strategy was really where this thing is won and lost. If you're a trader, if you're an investor, the mentality is typically you're going to buy and hold. But I think you got to have more knowledge than that just to even know when it's a good idea to go into cash. If you aren't going to play, any types of option strategies, there's risk involved, but you can eliminate some of the risks by having knowledge, right? And developing strategy, but it's not something you learn overnight. It's something that you're going to get beat up on, and then you're going to recover, and then you're going to be smarter, that type of thing. But you can at least know what tools are available to you to discuss with your financial advisor, to question when they're putting you into a stock that's, oh, you don't want to miss this one, and I'm not saying most financial advisors do it. Most of them are pretty on the up and up. But I think you got to have more knowledge and ask better questions during this type of market. And the reason for this is, I did executive education. I've worked with executives for 20 plus years. And one of the most important lessons I learned was that with executives is that they make assumptions, lots of assumptions. And so when people say on TV or your financial advisor says, or somebody tells you, well, stocks always rise, so you'll be okay. I just don't think that that's the mentality that you can have anymore with your investing. If it holds that we do hit some type of all-time high here in the next couple of months or in the next 5-6 months, and we do get an 80% drop, you're going to kind of want to have your ear to the ground and what is happening around you and where you want to be, so you don't lose 80% of your wealth, overnight. And so you don't want to make any assumptions that, it'll come back, at some point, whether you're my age or 30 years younger than me. But I think it's so important that people start to educate themselves about what's going on. If you're young, you'll have time to recover. But if you're closer to retirement age or you're approaching either retirement or you've accumulated quite a bit and you don't want to lose it, then you're going to have to be aware. You're going to have to know what's going on, and you can't live with the assumption that the stock market will make a comeback. It may take decades if we get an 80% drop. It took a decade from 1929 to really recover, and really it was until after World War II in 1945-46 that we fully recovered. So my encouragement to you, I don't have anything to sell you other than I think you need to educate yourselves. And to start would be just kind of understand the fundamentals of option trading, because it gives you a broader repertoire of knowledge for you to be able to take into your sessions with an investment advisor. So that's what I wanted to cover this week. And remember, there is always a better way.